Hi guys, welcome to my channel, Forex with Timilo. And in this video, we're talking about Nasdaq and how to use smart money concepts to trade on Nasdaq. As you guys know, smart money concept is the only thing I trade, is the only strategy I use in trading in the foreign exchange market, nothing else. So in this video, I will also be doing breakdown of the trades I took on Nasdaq. That was on Thursday and on Friday this last trading week. Okay, so I'll do a breakdown from the higher time frame down to the lower time frame. So as you can see on Nasdaq, this is the 4 hours time frame. You can see that Nasdaq has been in a massive sell. Nasdaq has been a massive sell, and at this point, all you should be looking for or looking at also is a sell, but also you need to be careful while taking sales, because at some point market might get to a demand. Okay, market might get to a demand and find a nice POI to start buying from. So you need to be aware of what is going on overall on the charts. Okay, so now let's zoom in closer. So as you can see, on the 4 hours time frame now, after all the old drop, we can see that Nasdaq has is starting to correct at this point in time. It's starting to push bullish. Let me cut all of these. You can see Nasdaq is already pushing up here. We broke above this lower high. We broke above this high as well, and the market has now pushed up. And when the market pushed up, as you can see, we left a lot of unmitigated demand zone, a lot of imbalances as well. You can see we have this impulsive candle, and so it has the presence of imbalance. As you can see, looking high here also, this is another demand zone as well. So we have these two zones, and the price has the incentive of pushing down into any of these zones, probably this, find demand and push up, or find demand here and push up. So as you can see, we took out this significant lower high, and also looking to your left, we have this supply zone that has imbalance as well, this high impulsive candle right here. So we have imbalance as well, and price is yet to fill up the whole imbalance. You can see price came close and we are yet to fill all of this gap. So at this point in time, I was actually looking for, I think on Wednesday, I was looking for a buy trade, because then now we've taken out this last lower high as well. And I was thinking price will likely use this demand right here. Let me zoom in. The price will likely use this demand and probably buy all the way up. I think this was during the NFP week. But yes, we got that buy, but it wasn't for long. I did not trade it because I think it was past my trading hour, and probably I couldn't find a confirmation to buy at this level. So I just left it right there. But I had that bias to go long. Yeah, as you can see, market did not exactly give a confirmation entry after we broke. So this was the demand, and after we broke this last lower high, price didn't return back to give an entry to go long. Okay, so that was why I left this pair alone as at that time. And I think going to the 15 minutes time frame now, I shared in the last in my last video, I think I shared a trade that I took a loss around this zone, because then I was now looking to sell. I was looking to sell Nasdaq and to this area and probably this area. but I was stopped out of the trade. I shared that trade as well, that I was stopped out. So let's just move forward and skip to the part. So even for the fact that I was stopped out of this trade, I was still looking for an opportunity to get into a sell later on. And yeah, so we got so now I was able to get another break of structure right here. Okay, so we had this break of structure. This is now showing to me that since this demand has been taken out, this demand has been broken, is showing that price is no longer going bullish anymore. So I was now looking for a sell trade for price to probably fill this demand zone that is yet to be mitigated, and also this one down here. Okay, so as you can see, market started pushing back up, and when market dropped right here, market left behind this supply zone right here. Market left behind this supply zone. So I was watching this zone for a possible sell entry. So did price get to that zone? Yes, we finally got that tap in. So let me move down to the lower time frame now. So we got that tap in, and at this point in time now, I was now waiting for confirmation, and yeah, I think let me go to the 5 minutes time frame. Yeah, so on the 5 minutes time frame now, on the 5 minutes time frame, this point of interest that I have marked is from the 1 hour the other time. And now, as you can see, price tapped the 1 hour, but moving down to the lower time frame, I realized that we still had imbalances right here that price could possibly come back to. And at this point in time, when price tapped this higher time frame point of interest, it was during the London session. And as you all know, during the New York session, that is when Nasdaq and other indices normally move fast. Okay, so I was like, okay, will price come to this 5 minutes refined POI, or the higher time frame 1 hour that I have marked out, has it been tapped already? Sometimes we encounter this type of issues on the charts when you don't know if your POI has been properly mitigated or not. Okay, so now I started to look for confirmation entries. Okay, so now if I'm to look for confirmation entry, this is the low that gave this last high that we can see right here. So if we can break below this low, then I'll be looking for a possible supply to mark my to get into the trade. And as you can see, this low was being taken out. And once this low got taken out, I had this zone as my entry point. Okay, I had this. And also I realized we have another supply right here that is yet to be mitigated. We have this supply as well. So because of my experience with Nasdaq, I know there are always crazy spikes when New York session opens, sometimes just to stop people out. For example, if the direction of the market was going to be a sell, markets may try to get traders that are in early sell, the market try to stop them out before then going into their direction. So at this point in time, I had a limit set for this zone right here, and then my stop loss at this high. I had it this way because price could tap this place and drop, or probably price could move up to mitigate this zone before dropping. So I had my I had my stop loss at this high, but I don't know, something just keep telling me that because it's not New York session time yet, we may likely still push properly into this M5. We may likely push into this M5 to mitigate all of this imbalance properly, that this will probably be a liquidity grab for people that will be selling fast, even though we have a break of structure already right here. So these are experiences, these are what you want to be putting in mind when you trade. So at the end of the day, I ended up closing, when I realized this, I ended up closing my position, though it did not hit stop loss. I decided to get out of this sell trade. I got out of the sell trade and waited for price to come here. So now, and as so let me just forward it, and that actually happened. So when this got all the way down, I was like, why did I close my trade? Looks like we are actually going to be selling, but I just kept my cool. I was still watching the price, and finally the 5 minutes point of interest got mitigated. As you can see right there, we had spike at the New York Stock Exchange open. As you can see, this, if you can check the down part of my chart right here, you can see the New York Stock Exchange open in my time zone is always around 2 p.m. 2:30. So this got tapped in, and at this point in time on this particular day, I think that was on is it Thursday now, I wasn't on my chart. I stepped out and this tapped. So if I was on my chart, I would have taken an aggressive sell entry right here, because of course the stop loss is around 49 pips. And since I already had it in mind that price was going to come all the way up, I would have taken a aggressive sell entry, but I was not on the chart and I did not set my limits as well. So I kept monitoring the chart. So now, as you can see, this is the last low that gave us this last high. So before we get the confirmation to sell, we'll need this low to be taken out. Okay. So at this point in time, I had my alert set right here for when price will break this low, and we actually had that low being taken out. So price moved, yeah. So we got the break of structure. So once we have this break of structure, this is like a confirmation. This is the confirmation that we need to continue the sell trade. And fine, if you had gotten into a sell from here, right here, and you got stopped out, no problem. There are times when we lose out on trades, okay? Don't be hard on yourself. At least your conditions were met. It tapped the higher time frame POI. We had a break of structure, which is what we always look for. So, and that is why your risk management has to be, you have to be disciplined with your risk management. Whatever you want to risk on each trade on your capital, always stick to it. So this would have been a -1 RR for you if you are taking this. Sorry about my lettering. This will be a -1 RR from your account, which is okay, and you can recover it back on another winning trade. Okay. So now, since we now have this break of structure, now is the next thing to do now is to find a supply zone that was responsible for this break of structure. And as you can see right here, if you are on a particular time frame and you can't get a clear point of interest, please go on to check another time frame where you can see a cleaner point of interest. And as you can see on the 15 minutes time frame now, we can see this supply zone right here. So then I now add my limit set right here, and my stop loss above this high, though this is the new lower high because we had a shift in structure. But like I always say, if you still have enough room to extend your stop loss, please do. You don't need to be hard on yourself. I want a very small pip stop loss so I can maximize my RR. Though it's fine, maximize your RR, but then don't get stuck out unnecessarily on a trade that would be a winning trade for you. So that was it. And for the take profit, I targeted this demand zone that we have on like the 30 minutes, 15 minutes, 45 minutes is more clear on those time frame. It was an unmitigated demand zone. You can see we have imbalance and price can possibly come back into this zone. So now this was my target for take profits. Okay, so let's just play. Let me move to the 30 minutes time frame. So we had a breakout structure. We have our points of interest marked out, and price came back, and my limit was tapped, and I got into the sell trade. It took time, but let's just be patient. Yeah, as you can see now, price eventually came and tapped my limit in, and price dropped all the way down, and that was it. And if you had missed this first entry, market provided yet another entry, because right here, after we broke this low that gave us this last push, after we had a break of structure here, price came back up to mitigate the supply zone, and this would have been a second entry, but I was actually out. I was not even on my computer. I was just managing the trades from my mobile phone. I think I was actually at a party, so this was my only position. But this, if I was on the system, this would have been another entry opportunity for me to have another extra entry, just like this is just like how to stack a trade. So this is another good entry, but I didn't take that. I was only in the first one, and price went all the way down. I didn't even have my take profit set on my MC4. I was busy dancing at the party. So I think I ended up closing manually around this area, because price actually went past where I wanted to take profits, and it was extra pips for me to catch. So I closed out manually, I think below my take profits, which was a nice trade. I think it was about 400 pips that I was able to catch on this Nasdaq trade. It was around 400 pips. So I closed out manually. I sent my MT4 screenshot of this trade to the Telegram channel. If you are not in that channel, you can check it out to see. I'm supposed to edit this video and sometimes put these screenshots, but I'm very lazy when it comes to editing my videos. So you can join the Telegram channel and can see the screenshots. And this was the trade I took on Thursday. Then moving on to Friday now, after securing this trade, then on Friday now, as you can see now, we've taken out this other significant low as well. And as you can see, price has also left behind this supply area. And you can also see that we have this impulsive move to the downside, which is also imbalance that price could probably come into to mitigate before dropping, because then we still have price still have the room to trade all the way down into this unmitigated demand overall. So I was on Friday morning, I was actually looking to buy. At first, I was looking for a buy entry from right here. I was looking for a buy entry, then later I will sell from here. But later on, my bias changed. And why did my bias change? I will explain that in a minute. And turning on my HR range indicator, like I always do during the London session, I realized price took out the Asian range high, the liquidity. Like I always say, there's liquidity line on top of this Asian range, and there's liquidity line below this Asian range as well. So during the London session, if I want to buy, for example, I will sometimes wait for the Asian range liquidity low to be grabbed before looking for a break of structure, then a return back for mitigation, then I will buy the trade all the way up. So that was what I was waiting for actually here. But then something was telling me, why don't you buy from this POI, since we have a break above this high? Probably price will retrace back here, then I can buy. But for some good reasons, I decided this was risky for me to buy just above the Asian range low liquidity. Okay, so I decided to set an alert at this level right here. At this level right here, I set an alert here, and I was telling myself, I will wait for this low to be taken out before I will buy Nasdaq. So now, moving on to the 5 minutes now. So let me just play. So moving on to the 5 minutes, you can see that with the knowledge of my Asian range liquidity, I didn't get into a buy here. This indicator actually assisted me not to take a buy here. So as you can see, I didn't get into a buy, and this Asian range low was now grabbed. And now we have the Asian range high grabbed, we have the Asian range low grabbed. So that was how. So okay, I was still studying what we have on the chart, and at this point in time, my bias suddenly started to change from buying this pair to selling this pair from right here. And though it was a risky trade to start selling at this level right here, it's actually risky, but then there's something we call continuation trades, okay? Because market has an obligation to fulfill. So for example, if the market's obligation is to sell and get to probably this zone, there's at a particular time, after market break structure, it will retrace back, mitigate supply, break structure, move back, mitigate supply. At a particular point, it will break structure and not return back to mitigate supply. It will retrace a little bit, probably find a demand and turn it to supply and go low. Okay, so at this point, some people will be waiting to catch a sell from right here, but price will not get there because price has an obligation to fulfill. If it keeps coming back, going down, coming back, going down, it will not get to its destination. So it needs to get to its destination fast at a particular point in time. So that's why you will wait at a supply zone and price won't come there. And price will end up going to your take profits. Okay, same scenario for buy as well. Sometimes we have break of structure for buy, retracement for mitigation, break of structure, retracement. At some particular point, price will not come back to mitigate your demand. It may find this previous supply, turn it to demand and push higher just because it needs to get to that price that is headed for. Okay, so these are some of the things to note. I do not actually like continuation trades like this because they are risky. Because now, how do I leave all of this imbalance and I'll start selling at these points at the market? Okay, so but I don't know, for some reasons I was able to get into a sell trade right here. So moving down to the 3 minutes time frame now. Okay, I think I'm fast with that. Let me cut. Okay, so now that we took out this Asian range low, once we took this Asian range low, and then I saw this as a break of structure as well. Saw this as a break of structure. Then I saw this as a liquidity grab. Then something with the experience I've had on the chart, I was like, it looks like this market wants to continue the sell from Thursday and price will probably not push back up. Okay, so I sensed it that this was a grab of liquidity. Then we grabbed liquidity and markets broke all the way down, clearing out this low. Then I decided to change my bias to a sell. Okay, so let me turn off my Asian range indicator now. And that was how I picked this points on interest. Let me go to the 5 minutes time frame. Yeah, so this, I picked out these 5 minutes points of interest, and I was looking at my stop loss to be at this high, though this can be my stop loss, but like I always like to protect my self and just give my trades breathing space. So I add that there, and going to the 3 minutes time frame now. So price came back all the way up, and as you can see, price did not properly tap into my zone right here. Price did not properly tap. So I manually executed a sell when I saw that price was pushing down. So I manually executed a sell trade right here. Okay. So the MT4 screenshot was shared in my Telegram channel, so I market executed this sell. I did not also send this point of interest to my channel members because this is not a high probability setup. Sometimes I do share outlooks and POI that I'm looking to take trades for, but because this is a risky trade, I was just getting it into this trade because my trading conditions were actually met. We have a liquidity graph, we have multiple breaks of structure, and we have an unmitigated supply. So I was willing to risk, and especially because I have made a good amount of profits from this previous sale on Thursday. So I have some little money to actually risk. So that was why I took this. So I manually executed a sell right here because I was then thinking probably price had mitigated this candle right here. So but later on, I saw the way price was moving, and going to the 1 minute time frame now. Okay, I think still on the 3 minutes time frame. So later on, price started coming back up. Price started pushing up. Then I now add another limit set for these 3 minutes points of interest. So remember, I had already have a market execution sell right here. Then I add another limit right here for a new position. And for my take profit, I targeted this demand that we have marked out on the higher time frame. So now I add 2 positions. The MetaTrader 4 screenshots is on my channel. You can check that out. So this is my first position, and this is my second position, and my both stop loss were at this last high, because I know if this high is being disrespected, that means we are not selling, we are buying. I will definitely look for a clear demand and get into a buy if I find a confirmation entry. So all the same, markets moved, came, tapped me in right there, got into the second position right there. Okay, and this first position was in a drawdown, but I kept my cool. I wasn't panicking because I had a calculated risk on both trades. So if I lose out on both trades, it's fine by me. This is just 1 RR and another 1 RR. So I'll be losing 2 RR on this trade. I'm still good to go. If I make another profit on another trade, I may catch a 6 RR trade and I'll be able to recover my losses. And that was it. Basically, price moved all the way down and even gave another entry, I think, but that was all. Let me show you the next entry. Let's say, for example, so all of this happened during the London session, and during the New York session, stock exchange opened. Then we had, I think, is this CPI? So if you were on the chart during the New York session open, you would have been able to catch this particular trade, because now this is the low. This low was responsible for this last high, and now we've broken below the low and price came back up to mitigate it. So this, if I was not in probably these 2 trades already during the London session, at the New York session, this would have probably been my entry for a sell and my stop loss at that high or at this high. If it was at this high, you see, I would have been stopped at. So this is why I always advocate for people to have extended stop loss, though not too much, but then you should make sure you are being protected. Okay, so this was a good entry for the New York session, and but I didn't take that. But as you can see, I had my 2 positions and my take profit was it. I think I got out at this level right here. Yeah, I closed out my trades at this point, at this exact point. So this is how to use smart money concept to catch trades on Nasdaq. This smart money concept works on other pairs as well, other forex pairs, metals, and oils, Bitcoin, cryptocurrency. So you can try and backtest and be patient with your trades. So be patient, and if your conditions are met, take the trade. Don't risk too much. Have a particular percentage you risk on your account. Like in my academy now, risk management is the most paramount in my academy, and this is like the secret of my trading. My risk management is the secret of my trading. And to my students also, I teach them how to risk properly on any accounts they are trading on. I also funded an account on the 2nd of June with $100 US, $107 US to be precise, and I was able to make a profit of over 100% in just 1 week on the account. So still following risk management as well. Okay, so it's not really about flipping the accounts. Still following my rules, I was able to make over 100% profit. Okay, so whatever account you are trading, a big account, a small account, your risk management is what will allow you to be profitable at the end of the day. Okay, so you don't want to be getting into any trade just because you just want to sell without having the proper risk management, without calculating how much you are willing to lose, how much you are willing to get from the market. Okay, so that will be all on Nasdaq, and till next time when I'll be bringing another video your way. Have a good time, and I wish you all the best in this new trading week that will be starting later in the day today. Bye.